Felix here, and when is this bear market bounce going to come? Will it happen straight after the Jackson Hole event, the Fed speech on Friday, even 10 a.m. on Friday? Or will we need to digest the PCE data on Friday? We're going to look at that. We're going to look at what Powell is going to commit to, what he's most likely to say. We look at the technical analysis of where the market is right now so we can judge where it's going the week. And also, very importantly, the net institutional positions. That gives you a huge clue as to where the market's heading. And then also round that up with a couple of stocks to buy, possibly right now. So this and much more to look forward to. Before we do that, I want to encourage you to do one thing and one thing only, and that's get your hands on the Goldman Sachs top 23 stock list there at the top. Where is it? Here it is, full benchmark. They say these are not just 23 dividend stocks that are paying twice the dividend of the market, but they also offer significant growth potential. Their list, not mine, but some interesting companies on there. Do go through it. It'll make you a better investor. It'll make you a smarter investor. So use it, share it. felixfriends.org/23, felixfriends.org/23 is how you get your paws onto that. Now, you may be familiar with the S&P 500. Why am I showing you a great big chart of it? Because technical analysis tells us quite a lot, as my cat is meowing in the background. And let's go for the obvious. The obvious is, well, nice rally up. Obviously, we're coming down here. But how far are we coming down? Well, let me zoom in a little bit down here. This down here below the chart is the RSI indicator. The purple line is the RSI, Relative Strength Index. It's a big popular momentum indicator. The real rally was accompanied by this, but the actual real buy signal came in here. And that at the top here is exactly where things really got started, where things really got kicked off. So on the way down, it works exactly the same, that you have, let me take a red pen here to show that it's red. If we cross this dotted line here, well, it's not pink. Microsoft won't let me change the color, blame them, not me. And we are really close to that. So if we go through that, we'll get a real bearish signal here. And also bear in mind, last 2 days of bearishness, we had really quite big volume, which again is a real indicator of bearishness. But let's get to this crucial data here first. The room to bounce, and then we talk about what the Fed's doing. This is really, really useful data. And I'd take a screenshot of it if you like. The black line is the net positions held by fund managers and asset managers. And it shows you whether or not they are essentially long or short the S&P 500, and they are right down here. They are short the S&P 500. That very, very, very rarely happens. Look at this chart. It goes back to 2017. I mean, 2018 wasn't exactly a great year in the market, yet the fund managers were still bullish. So they are really, really bearish. And why is that? Because people have got a ton of short positions open, well, or short contracts on options open. And at the same time, you're seeing a slight improvement in those guys who are net positive, but a massive decline in those who are negative. And what does that mean? Well, is it all the end of the world? No, actually, it's a huge opportunity. Why is it a huge opportunity? Because you've got an enormous room to go up. It's very much like an options trade. Like we trade things on very, very high implied volatility because we want it to come down. So if implied volatility is 90%, much more likely to go down than up. And this is very much the same, much more likely to go up than down because it's never, but at least in the last 5 years, it hasn't been at such low levels. So that gives a huge literally room to bounce. Right, let's talk about the Fed for a second before we go on to PCE. What's the Fed likely to say? Well, Jay Powell is unlikely to fundamentally change his tune. What happened here? Where did I go? Here I am. The Fed is very unlikely to really change his tune. He's not somebody who, Jay Powell that is, who commits to specific rate rises in advance. He's not going to say it's going to be definitely 0.75% or something to be bearish. Now, is he likely to be hawkish? Yes. I think he's going to remind us of their commitment to 2% inflation. I think he's going to be fairly strong on that. And then likely he's going to say we're going to be data-driven. And the market's going to like the data-driven because that kind of means you've done your gung-ho stuff and now you're going to just follow the data and you do a little bit less or a little bit more, but we can deal with that. And that would be, I think, a very nice bullish signal for the market that it isn't going to get horribly worse. If he comes out and changes his language, which he's unlikely to do, I think, because he did rudder back a little bit from his real hawkish stance, then, of course, that would be very negative for the market. But I think really he'll just keep hammering down on how committed they are on 2% inflation, how they do everything necessary and blah, 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 blah. And then he'll probably also pat himself on the back and be like, we've already done this much. We've done a lot of work. We're seeing data improving and that kind of thing. And that's what the market's going to love. Now, also on Friday, just before he speaks, so he speaks at 4 p.m. on Friday, just before that at 2:30, we're getting the PCE price index in. This is the Fed's, the core PCE is the Fed's preferred inflation measure. Now, it was at 0.6 for the month, 4.8% for the year. It's also lower. It looks better. Let me show it to you. Here it is. And the forecasts are for that to drop very significantly to 0.3. So if it does that, the market's going to love it. The market's going to rally and fly and jumping up and down. And there'll be champagne flowing on Wall Street. But economists have proven to be mostly wrong. The lot they ask for these forecasts are economists. I used to be one of those, especially the ones who worked in banks for some reason. I don't really know why, but they just tend to be wrong. So if we stay more to the 0.6% or so, then that could be a bit of a kick in the teeth just before the Fed chair speaks on Friday. So watch out for that data on Friday. Also watch out for making lots of money. Look at, I always want to celebrate some of my students. Andrea here, he made $900 with $1,800 buying power in 6 hours. Isn't that magical? Now, is that possible? Yes. Does that happen sometimes? Yes. It probably happens every couple of weeks, once or twice, but it's not actually our strategy. Our strategy is much more like what he's actually doing here. Same student, and Andrea, well done. He is at $4,000 in 3 weeks. He's still paper trading and he's using $20,000. So he's up, 20%. And it's fantastic. And I encourage people to really practice and trade. And then he's planning to go live with 10K. So he's looking at $700 to $1,000 a month from that 10K, which he thinks is very, very doable. And all these trades were very, very safe. And congratulations on that. Here are all of his trades. Look at his P&L. Isn't that absolutely lovely? P&L, open the percentage numbers here. Brilliant stuff. So that's basically what we teach. You can get your hands on that in 2 ways. You may give us a ring at felixfriends.org/coaching. We'll walk you through what our coaching program looks like to work with me directly to see how I got our portfolio up to 100+% for the year so far and going very strong. And that's, of course, a lot of coaching and handholding and guidance and reviews and one-on-ones and all of that. Or you may simply join the Master Options program here, felixfriends.org/options. There's a coupon code there, 41% off freedom to basically learn it all. It's about strategy. It's not about theory. It's all about strategy. And as a sort of former banker and all of that, I have a little bit of an insight into strategy. And I'm making a lot of money with it. My students are making a lot of money with it. And that's really the whole point of this. Now, if you look at this chart, I just showed you just of the SPX, the S&P 500, it looked a little bit gloomy, right? Because the indicators were all pointing really negatively down. We're having this massive sell-off the last 2 trading days. And let me therefore show you some good news. Not just because the chart looks particularly green. What is this? What you're looking at? I know it's a little small. This is Microsoft. This is from 2015 to now. Now, why am I showing you all of this? Because, yeah, of course, the stock price is going up. It doesn't really tell you very much. Then this indicator here, this one, is the PE ratio. And I'm not a huge fan of PE ratio. I think it's the most overly utilized and least useful thing to look at. But as a comparison, it's kind of interesting. So I put a purple line through where we are right now to see what were the valuations going back. And we're basically at the same valuations we were at in 2015 or 2017, 18, and 2019 after the market tanked. So we're kind of like basically as an average PE ratio. So are we overpriced or not? Well, much, much more interesting is this lovely bit of blue data just below here, which is return on, is it ROIC or ROCE? ROIC, which is what I wanted. It's ROIC, and that's really, truly useful. Why is that truly useful? Because it tells you what is the return on capital that Microsoft is making. And at the moment, it's about 32%. So give them $1,000, they make $320 every single year out of the capital. And then if we go back to the price levels where the PE ratio was the same as it is right now, what was the return on capital? Well, it was about 13, 14%. So do you therefore think that Microsoft is now cheaper than it was in 2017? Well, I would argue yes. I certainly would. Now, of course, none of that is, I'm not telling you to go and buy it. This isn't financial advice, but I'm telling you to go and research and to dig into and understand these kind of indices, and I'll tell you where you can look them up as well. Here is another stock, which I quite like, which is IDEX, which has had a bit of a rough patch here. But let's look at it again. PE ratio is 46. And by the way, ignore the numbers. Every industry is different. The nominal number is fairly meaningless. And what does that mean? Well, it's the same valuation we had in 2019 after the bear market there. It's the same we had in 2016. So those are kind of the sort of average-ish valuation that we're back to. Now, what was our return on capital in 2016? Well, it was about 35%. In 2019, crikey, it really went up. It went up to 65%, which is staggeringly and wonderful. And right now we're at 45%. So we're at basically slightly higher or in between levels that we were at years ago. And the stock is still trading at the same PE multiple. So, you know, it tells you quite a bit, I think. Or look at this one. It's a stock a lot of people loathe, but I think it's absolutely fabulous. Philip Morris. They essentially have a monopoly on smoking because you can't advertise tobacco products, and therefore no one's ever going to enter this market ever again. It's the smartest thing the tobacco lobby ever lobbied for, was a ban on advertising. It's just genius. You basically get to keep your market share. PE ratio is 16, but look at how flat it is. It's exactly the same that we had in 2015. In 2015, they were making about 48% return on invested capital. Good businesses, these. And right now, what are they making? Well, they're making 61%. How did they get to 61%? Well, the margin on those, you know, vaping, whatever, non-smoking heat devices is incredible, and people are still addicted to it, and it's a great business to be selling drugs. You might think ethically that's wrong, but I just want to show you there are good stocks to look for. How do you find them? Well, we've got a stock tracker dashboard here, so you could type in, you know, a bunch of these. Let's add Philip Morris to this, for example. Hit the update button, and then it just pulls them out. But it doesn't just pull out their names for you. You scroll across, and then it tells you. I'm just going to cancel this because it keeps running. It tells you, you know, the return on equity numbers, the gross margin numbers, and you can track this quarter on quarter. It tells you earnings per share over the last 5 years. Watch out for that kind of stuff. Long-term earnings per share is an important thing. ROE or ROIC is really what makes you money in the long run. You can get your hands on this particular sheet. Just go to felixfranz.org/Patreon. Links also down below. It's like 20 cents a day or something to join. Join us for the year. You get an extra month off. And that's, I think, what I really focus on is in these times is look for bargains, look for good quality companies, and keep averaging into them, keep adding to them. And I'm not saying you should buy the specific ones I'm pulling out here. There's just a couple of the ones that happen to be in my portfolio. Here is my options portfolio, which at the moment is completely empty. I haven't got a single open trade. Why? Because yesterday started a little bit mad, and we have this luxury as options traders to not do anything at all. And a lot of the time, that's where we make the most money. But we know we are up 118% on the year. We're doing very nicely. August is looking at 9% up. I will do more trades, but sometimes it's good to sit out madness and just enjoy the past profits and then jump into it when volatility spikes up a little bit. Our strategy is a fairly simple one. Well, simple, I say, but it's essentially what works, and it's what professional options traders do rather than this gambling that most people, unfortunately, in the retail space do. So most people go and buy a call option if they think Tesla's going to go to the moon, or they buy a put if they think something's going to go down, and that basically has at best a 50% chance of making you money. We aim for 80-90% probabilities on our trades. So what we would set up, I would never actually trade Tesla, but if it were Tesla, I'd say, okay, Tesla's going to go up or down 20%, plus or minus, don't really care which direction, and then we make money on that trade. And that's a little bit more sophisticated, and that's what I teach you as a strategy. And then, of course, lots of portfolio management, risk management, everything is hedged so that we know exactly what our risks are and that our risk returns are looking good. And that's how we consistently make these profits in a pretty choppy market, right? So 118% up for the year. Join us, learn about it. Go to felixfranz.org/coaching, book a call with us, or simply hop onto the program at felixfranz.org/options. That coupon code there is freedom. Write it down. And thank you very much for watching. If you enjoyed these little macro updates, do let me know. I'd be very kind of you in the comments, and see you soon.